Those are all of the top headlines that we are tracking this morning. There's a lot that's going on as far as the global picture goes. It has been quite a weak handover from the US, and on account of that, you have all of the Asian markets which are not trading too well right now. But you know, the cuts are not nearly as bad as what you're seeing in the US. So actually, a few of them have even moved into the green. So Taiwan has moved into the green. You have Hang Seng also, which has moved up a little bit in the past couple of minutes. But for now, you have the Hang Seng, which is trading with a cut of around 13 points. Taiwan is managing to, do the best. It's around 50 points higher. And for the rest of them, there's no big move coming in, but all of them seeing a cut between around 0.25% to 0.5%. So no big move, but it is quite mixed across Asia right now. The SGX Nifty will also come up for you. It's indicating quite a flattish start for our own market, just around 17 points lower. And this has also moved up in the past couple of minutes. But let's talk about Wall Street now. In the US, Wall Street ended Tuesday's trading session sharply lower. So this is, remember, extending the previous session's losses as fears of a recession grip the markets. So the Dow Jones closed over 1% in the red. The S&P 500 was around 1.5% lower at the end of the trading session. And the Nasdaq Composite once again was the biggest underperformer. It saw a cut of 2%. So let's also listen to some important opinion which comes in from JP Morgan Chase Chairman and CEO Jamie Dimon on how he sees the entire inflation worry, recession risks, the Fed, and lots more. Listen in.
If you look in the short run, the consumer is spending 10% more than last year and 40% more than pre-COVID. They're spending it in different things, so all your speakers up here, some are doing better, some are doing worse. That's a tremendous sum of money, and they have $1.5 trillion still in their checking accounts, more than pre-COVID. So the spending is down. That's the good news. And the companies are in good shape, too, by the way, and their balance sheet, consumer balance sheet is in great shape. The other news, which is not good, is that rates are now, 4% on their way to 5%. Inflation is eroding everything I just said. And that $1.5 trillion will run out sometime mid-year next year. And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about. I think the Fed has made it clear they're going to get to 5 and stop for a while. I read a while as 3 to 6 months. That may not be sufficient. I think that you have to look at the other risk we have is quantitative tightening. We've never had it before, ever in the lifetime of mankind. So I look at that as something we should be quite concerned about. And, so the suppression of the 10-year bond rate has been going on for 20 years, and it can't really be suppressed anymore. And, QT has just started, so it's very possible. And if you have like 2% on inflation, you should have a 4% bond today. So I don't look at this like it's got to go get better than here. Obviously, it's a risk-on trade. But that mindset may change if inflation sticks around a little bit longer.
All right, that is some important market opinion that we are tracking, and that's everything that we're looking at globally. But let's now talk about all of the cues that you should track as we get into a fresh trading session. We have our research team with us to take you through the trade setup. So Vivek, Vahishta, and Nigel all join me now. Guys, a very good morning to all of you. And Nigel, by the way, is joining us live from the National Stock Exchange. So we're very excited to come to you and check out all of the celebrations there, as well as, we celebrate our 23rd birthday. But first up, Vivek, I'm going to come to you. Take us through the cues that we have lined up. The global picture, once again, not looking so good.
Good morning. So what we are looking at is the fourth consecutive lower close as far as the U.S. markets are concerned. So cues coming in from U.S. markets despite strong data indicating that the market handover has been very weak. European markets too followed suit. While the quantum of the fall wasn't as much as the U.S. markets, it's been a negative and a weak handover. Now talking about crude oil prices yesterday fell quite significantly. Brent futures fell over 4% yesterday and was trading below the $80 per barrel mark. So that'll be an important trigger to keep an eye out for. Coming closer home, quite a few important events. The most important would be the RBI rate policy decision, and the outlook and the stance going forward will be something markets will be monitoring quite keenly. Also yesterday, remember, the rupee weakness was something that was being monitored, and today it will be interesting to see the trajectory of the rupee as well. Asian markets too have opened quite weak, and SGX Nifty is indicating a subdued start for our own markets today.
All right, maybe a little bit of subdued start, but let's see how we move from there. Vivek, thanks a lot for laying out all of those cues. But Vahishta is also here. Vahishta, take us through all of the individual stocks that we should keep on our radar today.
Hi, Pavitra. Let me start with Siemens, which has emerged as the lowest bidder for the 9,000 HP electric locomotives project in Gujarat. Next is BKG Foods International, which has reported their quarterly numbers. They've reported a 43% year-on-year growth in PAT, which was led by the operating performance and the top line. The revenue has grown by 32%, on year-on-year basis and has come in at approximately 570 crores, as it has witnessed a good double-digit growth in all its categories. 5 Paisa Capital, the board has approved the merger with IIFL Securities, which means 1 share of 5 Paisa for every 50 shares of IIFL Securities. Ircon International has bagged an order worth 122 crores from the Sri Lanka Railways, so some positive news over there. HDFC AMC, Arbiton Investment Management has sold 10.21% stake. Also, there have been more block deals which have been seen in companies like Craftsman Automation, Sapphire Foods, Jindal Stainless, NDTV and Veritas India. Back to you.
All right, Varishta, thanks a lot for that. We're going to keep all of these stocks on our radar. And finally, we have Nigel joining us from the National Stock Exchange, like I said, with all of the cues. Nigel, of course, the biggest news this morning is that we've turned 23. But take us through all of the action in the F&O space.
Well, Pavitra, you said when it's a party, you need to party big time, right? So I'm not staying indoors. I said, let's go out and let's take the party to another level. But in terms of cues, well, yesterday we did end lower with the cut-off close around 50, 60 points or thereabouts. But that's par for the course. Institutions sold 1,100 crores odd, and yet we saw only such a small cut out there. What happened then yesterday? There was some unwinding of long positions, both on the Nifty open interest and the Nifty bank open interest. So there seems to be some unwinding of long positions, and that's why we did end a little bit lower, coupled with the fact that institutions were sellers. The FIs, well, they unwound some longs as well, and they added shorts. As we've been maintaining, they were aggressively long, which may not be such a good thing. You lack some shorts in the system, and it seems, the wish is coming through, because now the short positioning has gone up to around 38%. Earlier, it was at around 23% at the start of the series. They were buying calls as well as puts, but yesterday they bought more puts than calls. They bought close to around 5 puts for 1 call. So in case things go wrong, there is some protection on the downside. However, what's telling you that at higher levels there's going to be a battle coming in from the bears is that they're writing calls as well aggressively. Which brings us to the active strike. The 18,600 put that was fairly active in trade yesterday. The premium out there has been hovering between 50 to around 70 rupees odd. So the writers out there, they will be looking at that 18,500, 18,550 odd level holding out, which is a crucial support out there. If we break that level, then 20 DMA comes into play. And on the upside, the recent highs, there'll be a bit of a resistance. But as you all have been mentioning, global Q is a little bit muddled. So we start off on the back foot. Buy on dips has worked. Wait buy for the RBI governor, and I think the trend is likely to continue. Back to you.
All right, that is what the setup looks like. Nigel, Varishta, Vivek, thank you very much for joining us and taking us through this setup as we get into this trading session. But with that, it's time for our first short break on the show. When we come back, the winter session of the Parliament will begin today, so we'll get you all that is on the agenda after this short break. Welcome back. You're still tuned into Power Breakfast. Now, the big cue that we're all tracking today is the RBI's Monetary Policy Committee. They will be announcing their policy decision today. And Ritu is joining us here to take us through all of the key expectations from what is the last policy of 2022. Ritu, it's over to you.
The Reserve Bank of India's Monetary Policy Committee is widely expected to hike rates by 35 basis points in this policy and bring the repo rate to 6.25%, according to the majority of the respondents to our poll. Now, this will be the 5th consecutive rate hike by RBI, but the pace of the hikes is expected to be slower, with some moderation expected in inflation and signs of a slower growth. Now, as far as the peak repo rates are concerned, the respondents were divided between 6.25 or 6.5%, with some even expecting peak rates at 6.75% in this hiking cycle. The inflation forecast for the year is widely expected to be left unchanged, and similarly, the GDP forecast of 7% for FY23 is also unlikely to be tinkered with in this policy. Now to the stance, where will they pivot or will they not is the question. Well, not yet, according to our poll, with half the respondents voting for the stance being retained at withdrawal of accommodation, with a third expecting some tweak in the wording of the stance only. So in terms of what the markets will be closely watching out for, well, the wording of the stance, of course, and the voting pattern also, because any disagreements between the members of the MPC will be a focus area, because it was evident from the last minutes of the meeting that two of the external MPC members, Dr. Ashima Goyal and Dr. Jayant Verma, are likely to vote for a smaller increase in the repo rate or no hike at all, and some view this as a sign that the rate hiking cycle is close to an end. The other focus will be the transmission of rates, because if you look at the data on your screen, while RBI has hiked rates by 190 basis points between Jan and November, bank lending rates have only gone up by 80 basis points, so the transmission is just about 42%. And when you compare this with other countries, transmission is near perfect in countries like the US, South Africa, Australia, even to an extent in in Canada, Mexico as well, but India really lags behind with just 42% of the rate hike transmitted. So this is an important metric that the MPC will keep in mind.
All right, Ritu, thanks a lot for taking us through all of the expectations of the poll. It's only a few more hours before we do get that policy decision. But for now, let's also talk about some key macros now. The Indian rupee weakened against the US dollar for a second straight day yesterday. So the Indian unit lost nearly 70 paise yesterday, and it has moved closer to that 83 per dollar level. That is something important that we're tracking. In fact, the rise in India's trade deficit could be one of the reasons behind this fall that we have seen in the Indian rupee. Remember, in October, trade deficit touched nearly $27 billion. This was, of course, due to soaring imports that we have been talking about. In a bid to reverse this trend, the government has now asked ministries to curb the import of non-essential items, and a ministry-wise list of non-essential imports has also been prepared for curbs for this reason. It has also asked them to ramp up their exports in order to help this deficit. So that is some important data that we are tracking on the trade deficit. But with that, we are also here to bring you some national updates. The winter session of the Parliament will begin today, and 16 bills are expected to be tabled in this session. My colleague Abhimanyu filed this report with all of the details that could be on the agenda. Abhimanyu.
As many as 16 bills are slated to be introduced in the winter session of Parliament beginning today. Among the proposed legislations are the Energy Conservation Amendment Bill and the Trademarks Amendment Bill 2022, which seeks to incorporate aspects of the Madrid registration system for registering trademarks worldwide. The Multi-State Cooperative Societies Amendment Bill aims to strengthen transparency in cooperative societies, while the Repealing and Amending Bill is aimed to repeal redundant and obsolete laws. Bills like the Electricity Amendment Bill, which is under scrutiny of a parliamentary standing committee, as well as the Telecom Bill, which is pending cabinet approval, and the Data Protection Bill in consultation stage, seem unlikely to be tabled in this session. The opposition is aiming to question the government on a host of issues like price rise, unemployment, EWS quota, misuse of central agencies, and the India-China border situation. The Gujarat and Himachal Pradesh Assembly election results will also possibly affect the proceedings, as parties will try to corner their rivals after the results.
Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity cues as promised, because that is where all the action really is. Manisha joins us to fill us in. Manisha, crude now below that $80 mark.
Oh, well, yes, and we have seen 4% of a decline in the overnight markets. Crude is now trading at an 11-month low. So that tells you that we are at the level where we were in December 2021, and this is pre-Russia-Ukraine war zone as well. So that's the kind of give up on premium that the crude really has done. The weak economic data from Europe, also China service sector activity hitting a 6-month lows, really did leave you with a very little choice here. And then the markets also did seize all the events within the last week where OPEC and allies did not decide to cut further output. That took some premium off the markets as well. And then there is near no impact of Russia price cap or European Union embargo, and that also has led some people going in for profit taking for sharp declines. And below $80 does look weak on the charts for crude prices. Now, not just crude, the U.S. natural gas prices are trading at a 5-month low. Higher supplies, mild weather across U.S. for the next 2 weeks, as in sense of forecast, seems to be weighing on not just the natural gas, but the heating oil prices also.
All right, Manisha, thanks a lot for getting us all of that action from the crude and natural gas space. But with that, we're completely out of time. Asia is quite mixed. SGX Nifty around 20 points in the red. We're going to wind down on this show, but a power-packed Bazaar morning call comes up next. Stay tuned for that.